Hey guys, 2025 has not been the year for the stock market, and we can see that with the stock market being down almost over 4% this year alone. The Nasdaq is down 7.5%, and if we just look at the monthly numbers, I mean they are going to be insane. As in, like the Nasdaq is down almost 11% month to date, and the S&P 500 is down over like 8%. It's crazy out there. And you may be thinking, what are we going to do right now? Should we sell? Should we just get rid of all of our stocks and ETFs and kind of wait out the storm? Well, not so fast, everybody. These things happen. The stock market does go down every now and then. I mean, we have seen it over the years. It's happened in 2022. It happened in 2018 at the end of the year. The stock market went down. It happened in the GFC. It's happened a lot. And you know what? It's going to happen more and more often. Well, and we're going to see this throughout the years. There's going to be ups and downs. There's going to be sideways. There's going to be just times when you think, maybe my investment strategy is not working out. Or there's going to be times where you're floating on that raft and you're saying, I am glad I kept investing for the long term because right now I am rich and I am living off those great investments that I made just 10, 20, 30 years ago. So in today's video, we are going to be talking about just a little bit about kind of those stock market's ups and downs. But we're really going to be looking at 3 ETFs that you could be buying today. And we're going to start off kind of with that mindset is, what can we be buying today? Hey guys, my name is Steve, and I run the Frugal Expat website, where we try to help people to save more and invest better. And today, if you like this type of content, make sure to hit that like button and subscribe. And today we're going to be talking about 3 ETFs that I think are good buys for right now. And you may be thinking, when is a good time to buy? Well, every day is a good time to buy, but when things are on sale, it's even a better time to buy. All right, so let's get started and let's get going on this great content. Now, when I'm talking about looking at some good ETFs, I want to look at some good diversification. I want to look at some ETFs that kind of fit in a good 3-fund portfolio. So it could be maybe a growth ETF, it could be a core position, or even a dividend ETF. I'm looking at kind of what is a long-term range of these ETFs, because I want to make sure that it doesn't look good for today, but it's going to look good for the future. And I want to look at also, is this good for cost exposure? So I don't want like an ETF that's going to cost me hand and foot over the long term. I want to have a good low-cost ETF, so that means low expense ratio. All right, so let's get down to the nuts and bolts of everything, and let's get started. Our first ETF that I think is a good buy right now would be QQQ. Now, you may be thinking, Steve, the tech market is crashing like crazy. You can see that in VGT, it's down 11% year to date. The Nasdaq is down only 7.5%. So if you're looking for something that has good growth, that has lasted not only this time, but it has lasted through the dot-com bubble, it's lasted through the GFC, it's lasted through 2022 when the Nasdaq was down 33%, and it's gone over the long term. It's been one of the best producing ETFs on the market. That is QQQ. Now, QQQ does have an expense ratio of 0.20%, which means it's just going to cost us about $20 for every $10,000 invested. Now, when we're looking at this investment, we want to see, do we want just all growth, all tech, or whatever? Well, it's got about 60% into tech, so it's giving us that tech, and so that's probably a reason why it's down a little bit. But it's also got consumer staples like Costco, and I love Costco because people like to buy, and it's a good place to buy some great items. So we are talking about a great all-round growth ETF, and it's got about 100 different holdings, and it is doing pretty well over the long term. So let's kind of take a look over the long term of the last 26 years that this ETF has been around. So let's go. Now, I have it charted right here, and as you can see, since its inception in 1999, it has returned over 960%. And as you can see, there are little blips. It has gone sideways for a couple years and then has skyrocketed over the last 10 to 15 years. This is a great ETF to buy and hold. And when is the best time to buy? Is when everything is on sale. When is the next time to buy? Just continue to buy and hold. So QQQ should be one of the best places to buy and hold. Now, if you want more tech exposure and it's something that's more on sale, BGT could be that ETF. Like I said, it's down over 11%. And if you want 100% tech, VGT could be that ETF. All right, on to our next ETF. Now, our next ETF that I think that you could be buying and holding right now, that it's on a sale, is VOO. Now, VOO is the S&P 500 ETF by Vanguard. It has an expense ratio of 0.03%. I have talked about VOO very much over the long term. It is a large cap ETF, and it's only down about 4% year to date. Now, I am personally a VTI person because I like the exposure of small caps and mid caps, but with small caps being down a little bit larger, and a lot of big companies kind of aren't down as much as VTI, you'll see that VTI is down a little bit over 5%, while VOO is down a little bit 4%. So if you have VOO, you're having a great core position that isn't down as much as a total stock market ETF like VTI. Now, VOO, like I said, is down, and so it is a good opportunity to start to buy. Now, this is probably the lowest it's been in about 6 months, so you may be thinking, oh, what's going to look like in the near future? Well, there could be pain. There may be some gain. But right now, we are building our portfolio for the future. And VOO could be one of the best core positions you could hold. If you believe in the top 500 companies of the USA, then you should buy some VOO. So this is a great core holding. And as we can see, if we take a look at kind of the long-term range, it has done pretty well. So let's take a look. Over this long term, the max value has been about 420%. And it's continued to grow and grow. And it's given us a dividend of about 1.27%. So that's good news for you. If you're looking for just a little bit of dividend, but a lot of good growth, this ETF is one of the best ones. And it's been averaging anywhere between 12 to 13% of the last 10 years. And it's just a great holding to make sure your portfolio stays intact. So you got a little bit of growth with QQQ. You got a little bit of stability with VOO. And our next ETF on this list is going to be SCHD. Now, what you may not know about SCHD is that it's up 4% this year. Yeah, VOO is down 4%, but SCHD is rising high. And that's because of some of its great holdings. Now, in my fun M1 Finance portfolio, I own one of the key holdings in SCHD, and that's AbbVie. Now, AbbVie is a pharmaceutical company, and right now, year to date, it is up almost 21%. And that is helping SCHD kind of rise to the top. SCHD, like I said, is up 4%. It is a great dividend ETF. And with dividend ETFs, you may see a lot of blue chip stocks kind of keeping it stable. You'll continue to grab some of those dividend payments every single quarter, which is great because most dividend paying companies, they're very solid, they're stable. Their price may go down just a little bit, but it'll continue to pay out that dividend. Stock market price returns aren't really affecting them as much. And so that means the total return is going to continue to grow and grow and grow. And this is just bringing stability to your portfolio. Now, I like SCHD because it's got a great dividend yield of about 3.6%. The expense ratio is 0.06%, so it's costing us about $6 for every $10,000 invested. And it's just a great holding to kind of keep your entire portfolio stable. So if you have a little bit of growth and you got a little bit of dividends, it's kind of interacting with each other, kind of keeping everything balanced. And that's why I like SCHD. It's just a balanced, all-around, great blue chip dividend ETF. Now, like I said, it is up 4%. And, people are starting to buy because it's going up. And that makes sense. And it is one of the better dividend ETFs. I talk about it a lot because I love it. It is so good with its fundamentals. Now, it's going to have a reconstitution coming up soon. So some of these holdings are going to be gone and some new ones are going to come in, which means there's going to be a little bit of change. But while we're having this market meltdown, you might as well load up on some schd. Now, I just talked about 3 great ETFs to add to your portfolio while the market is crashing and going insane. And this is just good news for you. You have one in growth that's crashing hard, so you might as well buy. You have one that's a core that's crashing a little bit with 4% VOO, so you might as well buy. And you also have one that is a great dividend ETF to keep everything stable, and it'll continue to pay you even when the markets go down. So that's a huge plus. So you might as well do what Insync says and say buy. So what do you think about that? What do you think about these 3 ETFs? Now, these are 3 great ETFs to make a great 3-fund portfolio. And I talked about a great 3-fund portfolio. And so I'll leave a link to that. And I hope you continue to buy, stay the course, don't sell, and continue to create income for your family and for yourself. All right, until next time, I'll see you.